Wall Street's main indexes ended lower on Tuesday, with the S&P 500 and Nasdaq snapping five-session winning streaks after disappointing outlooks from retailers weighed on stocks. The Dow and S&P 500 each shed about 0.2%, while the Nasdaq shed 0.6. Minutes from the latest Federal Reserve meeting showed officials taking a cautious approach on interest rates, saying they would raise them only if inflation did not continue to tick down. But Scott Ladner, chief investment officer at Horizon Investments, says the central bank should consider lowering rates as soon as April of 2024.
When the Fed says higher for longer, they're talking about keeping rates at this, these kind of 5 to 5.5% levels for pretty much all of next year. We think that is very unlikely because, we do see inflation coming down pretty quickly, pretty predictably, frankly. And as inflation comes down, the Fed maintaining rates where they are is actually becoming more restrictive through time. This is not a Fed that needs to become more restrictive if they're winning on the inflation battle, and they're seeing an economy which is starting to slow a little bit, which it is.
In company news, shares of Nvidia slipped from an all-time high on Tuesday and fell further in after-hours trading following the chipmaker's quarterly results. Nvidia forecast quarterly revenue above Wall Street's estimates, but also warned that sales to China and the Middle East would slow due to export controls. In retail news, shares of Kohl's shed more than 8.5% after the department store chain missed third-quarter sales estimates, and Best Buy also dipped after flagging weakening consumer demand heading into the holiday season.